Is Florida's real estate dream turning into a nightmare? All across the Sunshine State, cities once booming with buyers are now facing rising inventory, collapsing demand, and insurance costs that make mortgage payments look cheap. Could your neighborhood be next? From coastal escapes to family-friendly suburbs, these 10 cities are flashing the same warning signs we saw before the 2008 crash. Only this time, it might hit harder. Which cities are watching property values vanish and homes sit unsold for months? In this video, we're diving into 10 Florida cities quietly turning into ghost towns in 2025's unfolding housing crisis. Number 10. Port Charlotte. Port Charlotte was once one of Florida's most underrated hidden gems. Coastal breezes, affordable homes, and just enough action to keep life interesting without the chaos of big city living. But in 2025, it's a very different vibe. If you take a quick stroll through some of the neighborhoods here, you'll spot the problem without even checking Zillow. Houses sitting and sitting and sitting. Yep, Port Charlotte is suffering from a serious case of skyrocketing days on market. Homes that used to sell in a week are now lingering for 90+ days. And the numbers back it up. In 2022, the median home price in Port Charlotte hit $333,242. Not bad, right? But fast forward to 2025, and prices have dropped sharply to $285,719. That's a 14.2% plunge, wiping out equity for thousands of homeowners. People who bought during the pandemic boom are now underwater, sparking the early signs of a negative equity crisis, where folks owe more than their home is even worth. And it's not just prices. There's a supply glut in newer neighborhoods where builders rushed in during the boom, expecting demand to keep rising. But that demand dried up fast. Now rows of nearly new homes sit empty, and some projects were even canceled mid-construction because financing deals fell through. Add in the insane spike in homeowners insurance. Some locals are paying $7,000 to $9,000 a year, sometimes more than their monthly mortgage. And the math just doesn't work anymore for working families or retirees. They're packing up and leaving, fueling a slow but real population decline that's making things worse. Port Charlotte's real estate dream is starting to feel like a ghost town in the making. And unless the fundamentals shift, 2025 might just be the year this sunny paradise becomes one of Florida's biggest housing crash stories. Number 9. Cape Coral. Cape Coral used to be the golden child of Florida's housing boom. Back in 2021 and 2022, everyone wanted a piece of this Gulf Coast paradise. Investors, retirees, remote workers. Home prices surged to $424,767 in 2022 as demand exploded. But in 2025, that boom is fizzling out hard. Today's median home price has dropped to $361,761, a steep $63,000 slide, or nearly 15% down. And that's just the average. Some neighborhoods have seen even bigger dips. So what happened to the Cape's hot streak? For starters, we're seeing an investor sell-off in a big way. Many who bought at the peak are rushing to dump their properties before values dip further. Over 25% of listings are now owned by investors or flippers trying to bail out. It's creating a domino effect. When they slash prices, everyone else has to follow suit. But that's not all. Cape Coral is also experiencing exploding housing inventory. In just 12 months, the number of available homes has nearly doubled, especially in those newer developments that popped up like mushrooms after a rainstorm. Builders overestimated demand, and now buyers aren't showing up. The result? Homes are sitting longer and prices keep slipping. Another headache? Soaring insurance premiums. After Hurricane Ian tore through southwest Florida in 2022, insurance rates went wild. Some Cape Coral homeowners now pay $6,000 to $10,000 annually just for insurance. Seriously, that's like a second mortgage. For many, it's pushing the cost of homeownership out of reach. The city's charm isn't gone, but the numbers are getting uglier by the month. Pending sales are falling through at record rates, and builders are quietly canceling projects or pausing them midway. When construction halts and listings pile up, you know the market's nervous. Cape Coral might still look like a tropical dream, but beneath the palm trees, it's turning into one of Florida's biggest housing caution zones. Number 8. Northport. Northport was once the poster child of Florida's pandemic-era migration boom. Remote workers, retirees, everyone was heading here. In 2022, home prices soared to a jaw-dropping $379,254, making Northport one of the fastest-growing housing markets in the entire state. But just 3 years later, in 2025, those same homes are selling for $321,224. That's a $58,000 drop, or about 15.3% less. And this isn't just a blip. It's part of a deeper trend. One major issue is the supply glut in new neighborhoods. Builders rushed to meet demand, and entire subdivisions sprang up seemingly overnight. But now, many of those homes are sitting empty, with "for sale" signs collecting dust. Overbuilding has outpaced buyer interest, and the result is oversupply, which means falling prices and panicked sellers. Even worse, pending sales are falling through left and right. Financing is becoming a nightmare. Lenders are tightening the screws, requiring higher down payments and stricter credit scores. That's leaving more buyers on the sidelines and more homes stuck in limbo. In fact, over 30% of pending deals in Northport collapsed last quarter alone. That's huge. And don't overlook the rising foreclosure rates. Homeowners who bought at the peak are now struggling to keep up with payments, especially if they also got hit with rising insurance or unexpected HOA fees. The foreclosure filings in Northport have spiked by over 60% year over year, signaling trouble ahead. With so many homes sitting idle, the average days on market has nearly tripled since 2022. It now takes over 90 days to sell a house here, and that number's still climbing. Northport isn't a ghost town, yet. But if current trends continue, it might become one of Florida's biggest housing bust stories of the decade. Number 7. Palm Bay. Palm Bay was once one of those under-the-radar cities where you could still snag a nice home at a decent price. Back in 2022, the median home value was $328,035, making it a magnet for budget-conscious Floridians. But in 2025, it's a different story. Prices have dipped to $312,342. Not the biggest drop on this list, but that 15,000 slide is just the tip of the iceberg. What's more troubling is the hidden rot underneath the surface. Let's talk about the Airbnb owner exit. A lot of investors bought homes here hoping for sweet short-term rental profits. But in 2023 and 2024, new regulations and an oversaturated market caused a major pullback. Many Airbnb hosts are now dumping their properties. That flood of investor listings is throwing off the balance and pushing home prices even lower. Palm Bay is also getting hammered by price-to-rent ratio imbalance. Renters here are paying around $1,700 a month, while many homes still list for well over $300,000. That math just doesn't work for new buyers or investors, especially with 7 to 8% mortgage rates. When renting is significantly cheaper than owning, buyer demand tanks. And that's exactly what we're seeing. The buyer financing issues are getting worse too. Many working-class families in Palm Bay simply can't qualify under the new strict lending standards, so properties sit longer. The average home here now takes 85+ days to sell, up from just 30 back in 2022. Fewer buyers, tougher loans, more stagnation. And then there's the rental market weakness. Unlike booming cities where rents are still rising, Palm Bay rents have plateaued. Some landlords are even slashing prices just to fill units. That's another signal this market is cooling quickly. Palm Bay hasn't fully crashed yet, but the foundation's cracking. With weakening investor confidence, overpriced listings, and fewer qualified buyers, it's clearly on shaky ground. Number 6. Port St Lucie. Port St Lucie has long been one of Florida's most appealing family-friendly cities. It was safe, clean, and growing fast. So fast that home prices exploded to $405,010 in 2022. But now, in 2025, we're seeing those prices slide back down to $375,513, a $29,497 drop, or just over 7%. which on the surface doesn't look catastrophic. But dig a little deeper, and the cracks are showing fast. First big issue? Collapsing buyer demand. Interest from out-of-state buyers, which fueled much of Port St. Lucie's pandemic-era boom has dried up. With higher mortgage rates and fewer people relocating, the once red-hot bidding wars are a thing of the past. Now, sellers are offering concessions, rate buydowns, and price cuts just to get a showing. There's also a pending sales collapse. Last year, nearly 1 in 3 pending sales in the city fell through, either due to financing problems, low appraisals, or cold feet. That's a clear sign of a shaky market. Buyers are either nervous or can't get the funding. Then there's the surging HOA fees. Many neighborhoods here, especially the newer developments, saw their HOA costs rise dramatically to cover insurance, maintenance, and storm-related upgrades. In some communities, fees jumped from $80 to $200 plus a month, and residents are feeling the pinch. And while homes are still selling, they're taking longer. Days on market has increased from about 24 days in 2022 to over 65 days in 2025. That may not sound like much, but in real estate, that's a blinking warning light. Port St. Lucie isn't in free fall, but it's slowing, fast. The demand engine that once drove growth here is stalling, and unless interest rates fall or job growth spikes, this could be the start of a much steeper slide. Number 5. Siana. If Port St. Lucie is tapping the brakes, Siana is already skidding. This once affordable suburban haven southwest of Kissimmee was a magnet for first-time buyers and working families looking for a slice of the American dream. But that dream's cracking. In 2022, the median home price hit $322,045. In 2025, it's down to $290,655, marking a sharp 9.7% decline. And that's only part of the story. The big red flag here? Insurance exceeding mortgage payments. Seriously, some homeowners are now paying $500 to $800 a month in property insurance, especially in zones flagged for flood or storm risk. When that insurance bill jumps higher than your actual mortgage, it's no wonder people are walking away. This is creating a rental market weakness domino effect. Investors who plan to rent these homes out are finding it harder to turn a profit. Rents haven't kept up with costs, and vacancies are creeping up. Some landlords are now offering first-month free deals or dropping prices altogether. Siana is also facing declining property tax assessments, a rare but telling sign. Local governments are adjusting tax rolls down because home values are shrinking. When tax assessments drop, it means the market is no longer growing, it's retreating. Then there's the massive special assessments hitting some HOAs. Due to storm damage repairs and infrastructure strain, certain communities are issuing special assessments in the thousands of dollars, leaving homeowners scrambling to pay or risk liens. Days on market? Climbing. The average home here now takes 70+ days to sell, and many sit longer. And with population growth slowing, thanks to families being priced out by rising costs, it's getting eerily quiet in some once bustling subdivisions. Siana's affordability used to be its biggest strength. But in 2025, the costs of owning are outpacing the benefits and the signs of decay are mounting. Number 4. Deltona. Deltona used to be that quiet, low-key suburb where you could actually afford a house and still be close to the action. Orlando Beach is to the south, Daytona to the east. But in 2025, Deltona is flashing serious warning signs. Back in 2022, the average home here sold for $340,178. Fast forward to today, and that number has plunged to $298,655, a sharp $41,500 loss, or roughly 12.2% down in just 3 years. So what's fueling this slide? One big factor, population decline. Yep, the very families that once filled up these neighborhoods are now leaving. Why? Because the costs of staying no longer make sense. We're talking about insurance premiums ballooning past $6,000 a year, plus HOA fees jumping by 40% or more in many subdivisions. And when the population shrinks, so does demand. That's why buyer demand is collapsing in Deltona. Homes that once had multiple offers are now sitting with 0 showings for weeks. The average days on market has doubled, from 30 days in 2022 to over 75 days now. That's not just a slowdown, that's a full-blown stall. The investor sell-off here is real too. Many who scooped up properties to rent out are pulling the plug, flooding the market with listings. It's creating a loop: more inventory, fewer buyers, more price cuts. Add to that pending sales falling through, with 1 in 4 deals failing in Q1 of 2025 alone, and you've got a housing market on shaky legs. Financing issues, low appraisals, and buyer nerves are all playing a part. Deltona still looks picture-perfect on the outside. But behind those for sale signs and shuttered windows, the market is telling a different story. If trends continue, this city might just become Central Florida's most unexpected real estate cautionary tale. Number 3. Ocala. Ocala, the place where wide-open land, equestrian farms, and affordable homes once defined Florida's rural escape dream. But now, in 2025, that dream is hitting a few serious potholes. In 2022, the median home price in Ocala stood at $280,010, but that number has dropped to $255,510, a $24,500 dip, or almost 9% off the peak. It may not sound apocalyptic at first glance, but it's the surrounding symptoms that make this drop much more serious. The biggest issue right now? Soaring insurance premiums. Homeowners in Marion County are seeing policy costs double or even triple. A typical $2,000 annual premium in 2022 is now topping $5,500 to $6,000, especially for older homes or those outside city limits. For many residents, that pushes total monthly housing costs beyond affordability. Ocala is also dealing with canceled construction projects, a subtle yet deadly market indicator. Builders who once saw Ocala as the next boomtown are now slamming on the brakes. Multiple new home communities have paused midway through development, citing buyer pullback and higher material costs. Empty lots and half-built homes are scattered across the city's outskirts. The skyrocketing days on market isn't helping either. In 2022, homes sold like hotcakes. Now, the average sits at 80-plus days and rising. Buyers are hesitating, hoping for more price drops. Sellers are getting anxious, cutting prices and throwing in incentives just to get someone to bite. And then we've got declining property tax assessments. This is a major red flag. Local tax rolls are being adjusted downward because appraisers are acknowledging that home values are sliding. That means even the local government sees what's happening, and they're adjusting budgets accordingly. Ocala may still have horse farms and natural springs, but the housing market is limping. The rural charm is still there, but the financial foundation is starting to buckle. And if costs keep rising while demand continues to fall, Ocala could be next on Florida's growing list of ghost town candidates. Number 2. Tampa. Tampa was once the rock star of Florida's real estate scene, fast-growing, full of jobs, and absolutely booming in the early 2020s. In 2022, the average home in Tampa cost $383,410. But in 2025, that price has dipped to $360,013, a slide of over $23,000. That might not sound huge, but in a high-growth metro like Tampa, it's raising serious eyebrows. The red flag waving hardest? Exploding housing inventory. The number of active listings in Tampa has jumped by more than 55% since last year alone. Homes that once sold in under 2 weeks are now sitting for 75 to 90 days, with price cuts becoming the norm. Sellers are slashing prices by $10,000 to $20,000 just to stay competitive. And then there's the issue of buyer financing. With mortgage rates hovering around 7.5%, many first-time buyers are getting priced out or rejected outright. It's no surprise that pending sales fell by 28% in Q1 of 2025. That's a scary stat for a city that relied heavily on fast closings and investor activity. Add in the investor sell-off, especially in once popular short-term rental zones, and you've got a market that's not just cooling, it's starting to crack. Airbnb hosts are bailing, long-term landlords are struggling to break even, and vacant properties are piling up. Tampa's still a beautiful place to live, but from a housing standpoint, the heat wave is definitely over. Without a drastic shift in buyer confidence or interest rates, Tampa might be on track to become one of the biggest housing correction stories in Florida. Number 1. Winter Haven. Winter Haven used to be one of those cozy Central Florida cities that quietly grew into a housing favorite. It offered affordable homes, lakeside living, and just enough distance from the chaos of Orlando. In 2022, homes averaged $300,205. But now, in 2025, that number has fallen to $275,513, a $24,692 drop, or roughly 8.2% decline. But it's not just prices falling, it's the entire foundation shaking. This city is flashing multiple housing crash indicators, and fast. First up, insurance premiums exceeding mortgage payments. Some homeowners here are paying $600 to $800 monthly for insurance alone, especially those near lakes or older construction. That's more than what they're paying in principal and interest combined. Then there's the population slowdown. For the first time in decades, Winter Haven saw a net outflow of residents in 2024. People are moving out, citing unaffordable living costs and insurance nightmares. That's turning once busy neighborhoods into eerily quiet streets. And don't overlook the supply glut in new developments. Builders went wild here in 2021 to 2022, betting big on incoming demand. But now, many homes in these shiny new subdivisions are sitting vacant. Some builders are offering $20,000 discounts, free upgrades, and cash incentives just to move inventory. Buyers are backing out, financing deals are crumbling, and special assessments for storm damage repairs are hitting homeowners like a truck. It's gotten so bad, some properties are being listed below 2020 prices just to attract offers. Winter Haven may still be the chain of lakes city, but its housing market in 2025 is a chain reaction of warning signs. And unless Florida's economy or housing policy makes a dramatic shift, Winter Haven could become ground zero for the state's next big housing bust.